Good morning, folks. We are live.
Uh,
We are live on Smart Money Culture TV on your TVs there in Texas and Louisiana, as well as streaming live around the world. Sir David Porter, how are you?
yes, doing great, doing great. Happy to be on here, reaching our huge distribution, growing our networks, and we are buying gold and silver. And I can't wait for AtCostMetals to launch. We're getting
We
near the launch.
we are launching. We're launching. Pretty exciting. I'll tell you what. Of course, the talk of the day is Bitcoin. Bitcoin's on a huge tear, as well as the rest of these alternate currencies. This is really going to be mind blowing when these things take off, guys. Let me tell you, it will make your faces will melt. Faces will melt when this happens. Okay, and we are, of course. I took myself off the screen. Blockchain lobbyist, hey, what's going on, brother? I hope that you are doing well. We should catch up. The blockchain lobbyist here in Washington, D.C., my good friend, really great guy, family guy, and all that good stuff. Makes me want to do another conference, David. Let's do another conference.
Yeah, let's get out there and make a difference at these conferences.
I know. Well, it's fun. Well, yeah. Well, just being at the conferences, of course, we've done. I have one more week. Hey, you should come and if you can come and see Annie. I think we're sold out over the next few days, but in Old Town, me and my daughters are doing Annie, the play, which has been pretty fun. So if you can't come see us, anyway, so yeah, Bitcoin is absolutely flying. It is just flying. It's going in there. This institutional money is coming in. Everybody is FOMOing in. The alternate currencies, when they hit this, when they pump, it is going to just really be life-changing again. It's going to be life-changing again. You're going to see a lot of these currencies. For instance, ours, like Global Boost, trading over, it's about 2.8 cents, and the all-time high is 2.14. Okay, so if we were to go past the all-time high, not saying we will, not saying this is financial advice, and not guaranteeing anything, but if we were, that would be, of course, about 100x from here. So that you're going to have a lot of different, there's going to be a lot of different ones like that are going to go 100x, and you're not going to be able to get that anywhere else. That is one of those things that is just not going to happen. I'm here. Morning to you both. Well, good morning to you as well. Always a good morning to be on the show here. I'll tell you what, it is early for me. David has it easy over there in Dublin. It's 11 a.m. for him. Of course, early for me. This would not have worked out at different points in my life, but it certainly does work out now. We're on TV there in Texas and Louisiana at 5 a.m. and 11 a.m. We have the Porter Brothers show. David, you're looking nice. Did you get a haircut?
Yep, I keep my hair tight these days.
David keeps his hair tight these days. Earlier for you, I know you're out there on the West Coast. Yeah, I need to get a haircut too. When I saw Randy over at CPAC, he told me, Bruce, you need to cut your hair. He said, you got to
Really?
keep it tight. You got to keep it tight.
The guy without any hair told you need to cut your hair?
I really wanted to say something, but I held off. I said, oh, well, I think he still looks good. He says, well, you can tell yourself that. You gotta love Randy. Randy's great. So the news, of course, we're on this Impact Money in the morning. Impact Money in the morning. We're on Smart Money Culture TV. You can go to always watch us on smartmoneyculture.tv. Live over there. And at the top of the show, David mentioned, of course, AtCostMetals is launching. We are very excited about that. This is kind of long-awaited launch. They had to go through this KYC and thank you, and process in order to get everybody onboarded. And so people are going through the process of KYC. Thank you very much. But that AtCostBitcoin.Club is where you can sign up. It's free to sign up, and you join the club for a fee, and then you're able to buy precious metals, gold, silver, palladium, platinum at cost. And it's much lower than some of the other costs. So I know crypto for everybody, especially people that maybe don't know us. You're watching on TV. I know crypto can be intimidating. You don't know how to use it. You don't know how to do certain things about it. You don't want to be all crypto anyway. We don't know what may happen. We think that in 20 years, 10 years, 50 years, it's going to be worth a lot of money, but we don't know. All right. It's a new thing. It looks like it's going to continue to go up, even if it chops like this. But precious metals has gold, silver, palladium, platinum. I mean, these have lasted the test of time. Okay. The same amount of gold that would buy you a house 100 years ago is the same amount of gold that will buy you that house right now. And so that's when we talk about the inflation of the US dollar. That's one of the things that we compare it to. I mean, it's like that is the, what we say. Well, look at this. Okay. And so you want that. You want precious metals. You want crypto. You want land. Okay. And you need some cash. And again, we're not financial advisors, although I am ready to take my Series 7. So I might just go ahead and do that. We'll see. I might do that over the next month just for fun, especially as all of these projects, David, are raising money. And, hey, look, when the money is flowing back into the space, they're printing up so much money that with the money flowing into the space, we are going to be able to really raise a lot of money. And that's always fun. That is always a lot of fun. Okay, so a couple of things I wanted to go over here. Of course, we have really just mind-numbing stuff going on. Tucker Carlson, his legal counsel, from what the reports say, has told him that they might arrest him for interviewing Vladimir Putin, and that is that should be very concerning for everybody. The freedom of the press is one of the bedrocks of our Constitution, of our country. If we are not able to interview people, if we are not able to have freedom of the press, then we have really fallen. And of course, some people, I can't believe it. Yeah. Some people will say that we've already fallen. Of course, people say that all the time. But Russia fell for a long time too. The Bolsheviks and all these, they fell, and they took their country back at a certain point. And so it's not all done. Things. Nobody stays in power forever, and we may be in a position right now that doesn't look so good for us, but we are, especially in America, I feel like a revolutionary people. And of course, David and I, we preach the monetary revolution, which is a peaceful revolution. There's never been a shot fired. Okay. It's a peaceful revolution. Move your US dollars into assets that can't be seized or frozen or seized by court order, like Bitcoin, like Litecoin, like Digibyte, like Global Boost. These old proof of work currencies that cannot be seized or frozen or anything like that. And gold and silver. Okay. And precious metals. And that's how you fight back. Take that money that they're diluting and put it into things, and land, put it into things that they can't dilute. Okay. And that's how we fight back. And if they continue to just dilute a smaller amount of money that's available, of course, they have a smaller amount of money available. It is very concerning. It is very concerning that is happening with Tucker Carlson. I can't say that I'm surprised, but I certainly. Go ahead. I'm upset.
And you need to be your own sovereign. Have your private property, and when you're a sovereign, you won't have the big brother over your shoulder threatening to put you in jail for who you're talking to.
That is absolutely correct, and you know it, and I know it, and maybe we'll talk more about that moving forward. I just want to get this out here because one of the things that has really been going on as well right now is, of course, the DOJ appears to me. Okay, they appear to me to be blackmailing Congress right now. And that is a big, big deal. What you have going on right now, you have, of course, I'm just putting this out here. They did nothing about Epstein and his client list and anything like that. They've done nothing about it, right? I mean, I guess they arrested Epstein and they arrested his accomplice. She's probably not doing too bad. She's in some country club place. Who knows? I don't know that. But I'm just saying. And then what you have coming out yesterday is the DOJ, and we're about to go to commercial on your TV there on in Texas and Louisiana, but we'll be right back on the other side, about another minute and a half. But yesterday, the DOJ comes out and they say that they are investigating, this sex ring network. Man, let me just pull up the thing in DC. And this, I'm telling you, the last time they came up with this, it was at a similar point right in front of a bill that they wanted to pass, a big funding bill like this. So you have a big funding bill. They really bad. They want to push through. They really want to push through this this funding bill for. Shoot, I didn't send this over to our friend Matt. For this $95 billion, okay? And now what you have is, of course, they come out with the DOJ, and it seems to me like they're threatening. Let me just play this. Let me share my screen here. And sorry, I just got a little thrown off because of I didn't send the link to Matt. Here we go. And they come out with this video yesterday. Just watch this. Well, first of all, I said nothing about Epstein's Mossad-connected operations. Meanwhile, U.S. Attorney Joshua S. Levy confirming the commercial sex ring for the ultra-wealthy. Are the intelligence agencies and DOJ blackmailing all who oppose sending $95 billion, which cost about $1,000 for every household? So $1,000 to Israel and Ukraine.
This commercial sex ring was built on secrecy and exclusivity, catering to a wealthy and well-connected clientele, and business was booming until today. It's alleged that the prospective sex buyers in this scheme first had to respond to a survey and provide information online, including their driver's license photos, their employer information, credit card information, and they often paid a monthly fee to be part of this illicit club. The affidavit that's unsealed in court today alleges that once the buyers were verified, they were then texted and allowed to place orders with commercial sex workers. They would choose the duration of this encounter they wanted, the types of services they wanted, and they also would receive a menu of different options and different women that they could purchase, sometimes at rates between $350 and $600 an hour. The menu included photographs of the various women who were available that day. And the defendants then directed the sex buyers to various apartments in Watertown and Cambridge in Virginia, where they engaged in commercial sex. According to the charging documents, the buyers who made up this ring hail from an array of professions. They are doctors, they are lawyers, they're accountants, they're elected officials, they are executives at high-tech companies and pharmaceutical companies. They're military officers, government contractors, professors, scientists. Pick a profession, they're probably represented in this case. They are the men who fueled this commercial sex ring. And the government alleges that there are potentially hundreds of individuals who took these services as commercial sex buyers. The buyers in this case are not charged today. They're not named in the affidavit. But I want to emphasize, this is an investigation that's just getting going, and we're in the very early stages. This commercial sex,
and we're about to bring Matt on here, but the timing is unbelievable. Like, that's the way it works here. That's the way it works here in Russia. And that was Epstein's. That was, I mean, if you talk to anybody that knows what was going on there, most of them will tell you that that's what that whole operation was about. It was about entrapping, or however you want to say it, but getting these big, powerful people to do things that they weren't supposed to do. Maybe they wouldn't have done them anyway if they didn't have the options that he gave them, and then they own them. They basically own them. They have to vote the way they want. They have to, or else they'll ruin their lives. And so the timing of this is unbelievable. To me, I mean, it was like clockwork. Like they're trying to push through before the end of the week this new $95 billion, which will cost every household in America about $1,000. You're going to pay for it in inflation, so they're not going to make you pay it right up front. But it'll cost you about $1,000, and they really want that money to continue these wars, which are horrible. It's killing all kinds of people. And the American people should be able to stop to say no. And the way they're doing it with just charging us with inflation, we have no way of really saying no. And then the DOJ just comes out with this. It looks like blackmail to me. It smells like blackmail to me. I'm not saying that it definitely is blackmail, but I'm saying it sure does look like it to me. Anyway, let's talk money, more exciting stuff. We have the great Matt Dixon on with us here. Matt Dixon, how are you?
Hi, good morning. Good, thank you. Good morning, David. Morning, everybody.
Hello.
Pretty exciting day in the market's unbelievable. I know stocks and stuff. Stocks and stuff are down, but man, Bitcoin is just flying.
Yeah, it's quite interesting. As you say, stocks are down and yet Bitcoin is flying. So I've been trying to look at some of the possible reasons behind that. So that's what I'm planning on for today. So I'll jump into sharing my screen and see what we can see from what's going on. But I think it could actually have quite a lot to do with the inflation outlook. So I trust you can see my screen there now.
Let me add it to the stage. Yes.
So I'm just starting with the SPX, the S&P 500 here. Now, I did mention over the past couple of days, I thought this was at least a local top up here where I've got this arrow. There's a few Fibonacci extensions that coincided. There was confluence there right on that price, looking over different time frames. That's always powerful when you get different time frames and the actual Fibonacci extensions on those different time frames all coincide at one same level. So that's really quite important. And then we got this regular bearish divergence here and a couple of other indicators, overbought and RSI, things like that. So telling us of a potential turn here, and it has turned. Now, we don't know for sure, it could still push higher, but at least you had an opportunity to jump in short and now protect your trade. So no matter what happens, you'd be okay. But that's just telling you one story that, it did turn where we expected. This is the S&P. This is traditional conventional assets looking at downside. And we know that Bitcoin has pushed to all-time highs, and we'll come on to Bitcoin shortly. So I was trying to look behind the scenes to see what's going on. Now, I know a lot of people have said, oh, dollar index is headed through the floor. It's all over for dollar index, and that's probably usually quite good for risk assets. Basically, people want to put their money into risk assets to get the returns if the US dollar is falling. And also, a falling US dollar usually means there's more money around and it floods into risk assets. So here's the sort of medium-term view since for a couple of months now on dollar index. So DXY, and interestingly, it's fallen within this channel. So it's actually, the price is bounded quite nicely within the channel. And we've tested the top side 4 times now, and it's failed to break above. And we've had 2 touches now, 3 touches now on the downside at support, and it failed to break below. So there's every chance that we're going to push higher on dollar index, and that could be actually a potential negative, certainly for traditional risk assets, but we will look and consider whether that's the case for Bitcoin. It might not be the case. So what I wanted to look again back at, recession, because I've said for a long time, I think that the world and even the US is the bright spot, is actually looking as though recession's on its way. And we've looked at bond yields, we've looked at all sorts of different indicators. The first time I've shown this chart, and I just thought it's quite interesting. Every time you see a real low in unemployment. Shortly after, obviously they start to, the economy is booming, you've got low unemployment, and then it's cyclical. So then at the very low in unemployment, that's roughly the time that the recession starts. We see it here in the late 40s, we see it here in the early 50s, we see it again here and here, and it's actually every single time that unemployment bottoms, shortly after you see a recession to follow. The recession is the grey area. Every single time, it's without fail. It's amazing. And here we had, a fall in unemployment to a real low here, and then we had the COVID crisis. Obviously, that caused massive unemployment here, which spiked up, and we had the associated recession with it. But the fact is, we've got almost record low unemployment at the moment in the US. So potentially, we are very close to a turning point. And like all the other times, it might not be immediate, but you can see it's reasonably close after. That once we see that turning point, the recession will follow. And there's enough signs out there now, and this is just shown right from the 1940s to today. So we're talking 80 years worth of data here. Pretty much 80 years worth of data is showing it happens every single time without fail. So I don't think it can be avoided. I don't think the Fed can do anything different to avoid it. And then this is, admittedly, this is worldwide, but it is also relevant to the US, that debt servicing costs are increasing at the moment. And we can see that clearly. It's been happening now since 2010. So with debt costs increasing, that's obviously a drag on the economy and another precursor towards potentially, I mean, this has been going on a long, long time now, potentially that we're going to see the US and the world fall into recession. So here's inflation again. We've looked at that many times, and we can see inflation fell and basically it started rising again. We had a bit of a tip up and it started rising again. So inflation is beginning to rear its ugly head again. And the next chart I think you'll find really interesting. So this one looks at the expectations for a rate rise in the coming, well, in the next meeting, basically. So the brown one, this is the bottom one, shows the expectations for the March 20th FOMC meeting. That's the interest rate setting meeting. And the expectation at the end of last year, December last year, right at the end of December, there was a 90% chance that the Fed were going to drop rates at the March meeting. And as time has gone on, the chances are getting less and less and less. And the reason for that is inflation is picking up. And so they cannot afford to lower interest rates, even though the economy will be slowing and unemployment will begin to rise. The economy will be slowing. So despite all of that, they won't be able to, they're not able to raise rates because they've got problems with inflation. And it's a real problem. They've got the hands are really tied, because if you've got inflation and the economy is slowing, that's a really difficult situation for the Fed. They can't afford to lower rates to stimulate the economy, but ideally they need to lower rates. So what is going to happen is they're going to print money at some point. But even printing money, the problem is that causes inflation. So even that's not an easy solution. So I think at some point they're going to have to find some really creative methods to try to stimulate the economy whilst they've got inflation. And that's a really difficult one. So this was just looking at the March, the brown one there, about the expectations there. But even if you move forward to the May rate decision here, again, they had 100% chance that they were going to lower rates in the May meeting. There's 100% chance that they were going to do it. That was the market expectation, 100% chance back in December last year. And you can see that's fallen again consistently as we're seeing problems with inflation in the economy. The chances of the rates falling are getting less and less and less. And now it's down to 24% chance. So in other words, even as far out as May, they're almost definitely not going to be lowering rates. They're going to keep rates higher for longer. And this is not good for traditional risk assets like S&P 500. But it may be a different story for Bitcoin. That we'll look at that. And then we'll move out to the June meeting. Again, even with the June meeting, you can see actually the chances are falling and falling and falling. And maybe they'll continue to fall. Right now, 65% chance they're going to lower rates in June. So actually the chances are that it's a bit above 50%. They're probably going to lower rates in June. So that's a long time to wait for lower rates. But at the rate it's falling, the expectation is falling, it could well be below 50% by the time we get to June. And then maybe we won't get a June rate fall either. And
Right.
Same story for the July meeting. So these expectations are falling. So that's because inflation is rising and expected to continue to rise. So that is a real problem that the US are going to be facing. And just another, Fed's preferred measure, which, as we probably know, is PCE. And again, we can just see that's rising. That's their preferred measure of inflation. It's way above their target rate, and it's rising. So it's a big problem for them. So we'll just move on to Bitcoin. Now, amazingly, unlike the S&P, Bitcoin has been rising and rocketing. And obviously, there's a couple of reasons probably behind that. There's obviously the ETF, and we're getting massive inflows now, net inflows into these Bitcoin ETFs. So that is a major positive. There's a lot of money flowing into Bitcoin at the moment via these ETFs. And obviously, there's also a lot of FOMO, people piling in even from the retail sector. So there's lots of money coming into Bitcoin, and that's what's pushing the price. But where are we at? Because I always get a little bit worried when virtually everybody is buying into an asset, and there seems to be only one way it can go. Nobody can be selling Bitcoin now. Everybody's got to be buying Bitcoin, and that is a kind of dangerous place to be. So I've looked at the wave count, where we're at, and I'm starting with a shorter count here, just on the 4 hour. Each of these candles covers a 4 hour duration. And I'm just looking, I'm going to expand out time-wise as we go through the different charts briefly. But the last wave I'm looking at is from wave 4 here to the top here. So it's the 5th wave I'm looking at. It's made up itself of 5 waves in blue here. So wave 1 to here, 2 to here, 3 to here. And interestingly, wave 3 was an exact Fibonacci extension of wave 1, which, as you'd expect. And then what I did, which is not a rule, but a guideline for Elliott wave. If you measure from the 0 point of the starting point of this wave 1 here to the top of the wave 3, and that's what I did here, measure that Fibonacci measurement, then transpose it to the bottom of wave 4, then 0.618 is normally the termination point of wave 5. And it's a bit higher than I was expecting, but it's still, this is what it actually works out at. It's reasonably clear. And again, even as we look out and open the charts out, we'll see that this is how it's looking. This is potentially a triangle formation. I've opened it out and it does look like a triangle formation. Triangle is what's called a pre-terminal wave. So it's the one before the final wave in this cycle. So if that's the case, after this wave 4, if it's a triangle, we'd expect a 5-wave thrust, and it's called a thrust to the upside out of the triangle. And that's precisely what we're seeing, this powerful thrust to the upside, and itself is broken into 5 waves. So I've measured here wave 1, wave 2, wave 3. Again, if you did another Fibonacci measurement of wave 1, transpose it to wave 2. Wave 3 is exactly 4.236 of wave 1. That's another very important Fibonacci measurement. I think it's 4.236. It's one of the major Fibonacci extensions. I know that for a fact. I measured it before. So that labeled the top of wave 3, and that's very typical. Powerful wave 3, the extended wave, with a blow-off top on the top of wave 3, which we see here with this spike, and then the pullback in wave 4. And then I think we're pushing up in this final wave 5. Whether it stops here or a touch higher, we're not quite sure, but we look as though we're near the end of this particular cycle. So if we scroll out just a little bit, so we actually measured from this wave 4, we can go back a little bit further, and we can see that the wave 4 is actually part of a bigger cycle. We're made up of 1, 2, 3, 4, and the big 5 here. So the top of wave 3 again was an actual perfect Fibonacci extension. We'll see that on the next chart. But we can see how all these Fibonacci measurements just line up beautifully. And it is just amazing how this 0.618, it shows that the charts aren't completely random, that whether the market's factoring them in, whatever reason it is, it doesn't matter what reason. All that matters is that these actually do work to identify turning points in the market. So that's just a little bit of a wider view. We'll come out wider again. So there's that 3 that we looked at, the 4 and the final wave 5 up. But you can see even before that, We've got basically wave 1, wave 2, wave 3, and you can see wave 3 here. So I think that previous one, by the way, was actually 2.618 was the extension I was looking at there. This is the one which is 4.236. Another very important Fibonacci extension. So we measured wave 1 here, transpose it to wave 2, and 4.236 was the exact extension for wave 3, which is a well-extended wave for wave 3. Then we got wave 4, and we've got quite a big wave 5 as well to the upside. Now, I've still got it labeled here as A or 1, B or 2, C or 3, as the potential move to the upside, and we'll see why I've done that. What I've done here now is look at really the history of Bitcoin since the all-time high. And here's the all-time high around 69,000. And we got a movement down, whether it's, ABC, or it could even be a 5-wave movement to the downside. It looks like 5 waves, 1, 2, 3, 4, 5. That's possible. If that's the case, then this is just a correction to the upside. And we can still certainly go higher, but that would mean there's potentially more downside to come. But the other way of looking at it, there's always 2 sides to the coin. There's never absolute certainty in trading. But here we can see from the low point, we do have a clear 5 waves up in this wave 1. Here we have 1, 2, 3, 4, 5. That's a nice 5-wave movement up for wave 1 and a corrective sort of sideways choppy movement for wave 2, as you'd expect. Then we got another small 5-wave movement up for the smaller wave 1. So we've got wave 1 in red, 2 in red, then 3 in red is up to here, but the 3 itself is made up of 5 smaller waves in blue. So there's the 1, there's the 2, there's the 3, there's the 4, and the 5th wave to the upside here. And that's the one we calculated. The top may be round about where we are for this particular wave. But what's interesting is, if this is a 5-wave movement to the upside, then it's only going to be a correction downwards before another push to the upside. And that final push to the upside, if that's the case, should take us to new all-time highs on Bitcoin. But all I'm saying is, short term, I'm expecting a correction from around these levels. And I've said that really the past few days. And it is pushing higher, and there's a lot of pressure in there, as I say, with ETFs and interest rates and so on. So coming back to interest rates, the important thing about Bitcoin is the limited supply. So there isn't inflation really, or there's minimal inflation. In fact, what's really interesting is now the net inflow into ETFs is higher than the increase in supply in Bitcoin through mining. So we know that the maximum ever in Bitcoin will be 21 million. That is about the year 2140, somewhere around there. They'll achieve that 21 million. We're actually, I think, about 19.6 million Bitcoins around in circulation now. And so we're getting towards the end of the total supply. So the supply gets smaller and smaller and smaller every time there's a halving event every 4 years. And the next halving event is coming up this April. But even now, before that halving event, and a halving event means that the new supply halves, it actually is cut in half. So the supply is even more constrained. So if we can continue with this demand through the ETFs and retail and so on, and then they actually constrain the supply again by a further half, there's going to be even more potential pressure on Bitcoin. So I do think that we're due, as I say, for a short-term pullback in a wave 4. When I say a wave 4, I think we've just about completed red wave 3. I think red wave 4 could actually pull back quite a little bit, but then we've got a red wave 5, which should, I believe, probably take us to new all-time highs. That's a reasonable scenario that will happen. So that really explains why, when we've got increased inflation, which is hurting traditional risk assets like S&P 500, it's actually potentially good for Bitcoin, because Bitcoin isn't that inflationary. It has a limited supply, only over 21 million. So that's the reason that even big institutions are now piling into Bitcoin, and why there's so much money piling in and pushing the price up day after day. It's pushing higher. But I'm just saying, be careful, because at some point you've got to get a pullback. Markets do not move straight in one direction. So just be careful. So that's where we're at with it, and I think that's the explanation as to why Bitcoin is flying, because I think it's inflation and ETF driven, and I think it is definitely that dual story, Bruce and David, because we're definitely seeing the traditional assets challenged at the moment, like the S&P 500, and yet crypto and Bitcoin is flying. So I think the only real explanation I can see that answers all of it is that it is inflation driven, and crypto is the logical place to put your money if there's inflation problem. Where's it's a store of value. It's becoming digital gold, what it's always supposed to be.
Yeah, it is. It is really interesting, right? I mean, we have you always want to be diversified, but yeah, I mean, it's hard to even travel, with $50,000 worth of precious metals, but you can travel with $50,000 worth of crypto, no problem, and it's being accepted at more and more places. You don't even have to turn it into fiat.
Yeah, absolutely. I mean, it's not, one Bitcoin is 60,000 all but now, but you've got 8 decimal places, so you can still buy a cup of coffee with Bitcoin if you want. And as you say, more and more places are accepting Bitcoin, but it's not actually that people are spending it, because when it's such a valuable asset, store of value, people don't want to spend it because we've got inflation. Why would you want to spend it? You want to store it. It's the place you store your value, because it's the thing that goes up in value, in dollar value. So if you actually spend it on a car or on a coffee or whatever you want to spend it on, you're actually spending a very valuable asset, which at the moment is protecting you against inflation. So gold is a protection against inflation, but this is digital gold. And actually, as I say, the actual production of new asset ratio between gold and Bitcoin after this halving, Bitcoin will actually be even more attractive than gold on that basis.
Absolutely. Well, and even storing it is way easier. You can
even using a custodian, even using a custodian is very, very cheap, but you can store it very, very safely. In fact, I know of devices now which are extremely safe, and they use multiple different metrics to ensure safety and security. And as long as you store it properly, especially in a cold wallet, it should be absolutely safe. And not should be, will be absolutely safe.
It will be actually safe. And here's the thing too, you can be very, like if someone comes and they're looking through your house or rummaging through your house, it's a lot easier to find precious metals than it is. One, you can store this stuff just in your head with the seed phrase, but even if you have it on some thumb drive or something somewhere, it's like, I mean, this is a game changer. And this is what we've been saying for so many years, guys. This is something new to the world that has never been. The world has never had anything like this before, and that's why it's such a game changer. And at a time when, I think they're going to probably push through this 95 billion. And the sad, it's one, it's going to cost every household in the U.S. about $1,000, but two, they're not going to stop there. Next month they're going to want another 100 billion. Or it might take them 2 months. And so now that they're on this, because the war is not going to stop next month in Israel or the Ukraine. Especially if we fund it for another month, nobody has any interest in that war ending. It's just a sad state of affairs. But 95 billion, everybody gets a cut of it. You have like plenty of money to pay everybody off. You have commissions on arms deals. You have all these types of things. And so none of those people really want the war to end, or even at all want the war to end. I don't know. And they certainly aren't going to want it to end before they get one more paycheck. So you're going to be hit. Everyone in the U.S. is going to be hit again in 30 days.
Problem is, once you start on this money printing thing, it is like a drug, basically. They have to keep printing money. Maybe not continually, they'll be on and off, but they have to keep printing money. Every time the economy slows a bit, they're going to have to print more money. And long term, they are spending on things like fueling wars and effectively things which aren't good for mankind, really. So it's not producing productivity. It's just basically creating money out of thin air, which effectively has no value. And in the long run, that will come to show. But short term, yeah, people are preparing because they're putting the money into Bitcoin, which is virtually inflation free. Very little
It's
inflation.
virtually inflation free. And the other thing about it is too that we talk about, and I want everybody to really understand, is that stocks, they do a stock split, they do dividend payments, they do all these types of things. There's none of that with Bitcoin. Like people make other chains and they do all types of things, but Bitcoin is Bitcoin. Like it really is gold. It is digital gold. And that's why you just see this just flying. And just to put that into perspective as well, with the money printing now that they're kind of drunk on this money printing, this is like an extra $1,000 that they're going to tax. I think pretty much they're going to do it every month. I don't see this as being sustainable. I feel like this is really going to crash. I was just kind of running some numbers last night in my head. Because if we all got taxed basically an extra $1,000, and it's tax time, so everybody's doing their stuff, so it's all fresh in my head. But if we got taxed an extra $1,000 in January, and now we're going to get taxed an extra $1,000 from inflation in February, and if that just continues along the line, at the end of the year, we spent $6 trillion via that's what the Treasury tells us last year. And if we end up at a number, we already spent almost 2 trillion this year, and it's February. So if we end at a number that's 12 trillion instead of 6 trillion, there is no way that people's, even if they get their little increase of 1% or 2% or 3% per year, there's no way that their wages are going to keep up with that. And so we're going to end up in a situation, I think, by the end of this year where things are going to be really bad.
Yeah, I mean, they don't have a choice. As you know, the debt repayments are they're taking a large proportion of the tax that they collect now, massive proportion of it, just for debt repayments. And the problem is, with inflation being sticky as it is, and they're actually keeping rates higher for longer, this means that the repayments on the debt are going to stay higher for longer. And actually, they're going to have to increase the debt anyway for the spending that they need to do. So it's not getting better, it's only getting worse. And I don't want to be negative, I hate it, but this is the situation that they've put us in.
Yes. So that's the other thing, the inflation tax, that is massive, growing. So I'm just putting this out there because I want people to have a kind of a marker to join in. So that's the other part of it. So then if this inflation is just going, really through the roof, I mean, costs of services are going to, I just don't see, it's at the point now, and I know we've been saying this for years, but we're at the point now where we're kind of at where it's no return. Like you said, they're not going to stop it. They're not going to stop fueling these wars. And they can't stop the printing. So I think, guys, if someone tweeted to me or they responded on my X post yesterday, like, yeah, good advice, Bruce. Like, we don't have any money to put in Bitcoin or gold or whatever. And I mean, I get it. But I mean, that's the way out. I mean, that's how we fight back right now. I don't know how else. It's a mess. It's a mess.
Yeah, I mean, if you look at the big guys, what they're doing now with the money, the big institutions are now putting their money in, but buy these ETFs into Bitcoin. So probably if they're doing it, it's a good indication that's the right thing to do.
Yep.
Usually, do what I do, not what I say. So they're still talking. A lot of them are still talking negatively about Bitcoin and cryptocurrency and so on. The UK in particular, the government's really negative about it. But you'll find that the people in the know are putting, and the institutions, especially financial institutions, now piling money into Bitcoin. And so it is a matter of not what they say, but what they do. And that's where to get your guidance from, because you can't trust what they're saying, especially, we're seeing they're trying to talk up the economy and so on, and yet they're pushing up, keeping inflation sky high. And we know that so many banks have gone bust. More banks went bust last year than in many, many, many years. And this was because, again, inflation is what is the root cause of the problem.
Right. Well, inflation's root cause of the problem. They can't print their way out of this. They're going to continue printing for these wars. There's no real end in sight. And now, of course, the whole apparatus here in the U.S. is just a mess. As I was talking earlier before you came on, with the DoJ, by all appearances, blackmailing now Congress. I mean, everybody has their own secrets, right? Everybody has their own weaknesses. So, yeah, just an absolute mess. Well, thank you so much for coming on, Matt. We always appreciate it. Great analysis. We will be at it again. We didn't run learnhowtotrade.com.club. Make sure to check that out. Discount code TradeSmart10. Learnhowtotrade.club. Trade with us. Trade with Matt Dixon. The average person that goes bankrupt, if they made an extra $600 per month, it would have kept them out of bankruptcy.
Amazing.
Yeah.
It's a very fine line. So anyway, hopefully have some more positive news tomorrow. Let's hope Bitcoin's to new all-time highs at least.
Bitcoin is already, it's flying. Bitcoin is flying. Definitely life-changing stuff. So exciting.
Great. Thank you, guys. Thanks, David. Thanks, Bruce. Thank you, everybody.
Cheers.
Catch you tomorrow. Bye for now.
So absolutely. It's just crazy right now, and it's inflation that we're talking about. I mean, this is it's out of control. Like when you try to wrap your head around what is going to happen for the rest of this year, we're in the final throes. They know it's going down. They know that it's crashing and that there's no real hope for it. I mean, this is really where we're at. And so they're just stealing as much from you as they possibly can before the whole thing crashes. I mean, we're talking hyperinflation, guys. Hyperinflation. I mean, just think about it. Like if you're taxed an extra $1,000 per month over the next 12 months. Think about how much you paid in taxes this year. I mean, I don't know how much money you're making or whatever, but how much did they withhold? They do the reason they do the withhold is so you don't realize how much you're paying. So they withhold it on your check, so you don't have to write the check at the end of the next year and realize, wait a minute, what am I doing? Where is this going? Why am I doing this? Why do I have to pay this if you're just printing the money anyway?
Yeah. And how do you get out of it?
Yeah. How do you get out of it? And of course, with the printing of the money, they've made it where you just can't get out of it. But this level of, we're 3x right now. So you're the amount you're paying on your taxes for 2023, the effective tax rate, the real tax rate is actually 3 times higher than that, because of course the government spent 3 times more than they're collecting. They want people to eat Kellogg cereal for dinner now because of inflation. Did I get that right? Sorry, sometimes spacebar takes. They don't care is the thing. They do not care. They don't care. They just they're all making a ton of money, and they're sick on the printing of the money. The central banks, these guys, I mean, they've been doing it forever. So these guys, the central banks, they literally just print the money, and it's a great business. They print the money and everybody believes it. Remember that video I had from the New Zealand guy? Let me see if I can find that one. We print being a central banking. It's a great business. We print money and everybody believes it. I can pull that up pretty quickly here. Oh yeah, here we go. Here it is. Let me share this. This is worth a watch here. They know it's a scam too, obviously. Central banking. It's great business to be in. We print money. Listen to this guy. This is at one of their meetings.
The fiscal challenges, etc., that are there. So very focused on being cost effective. We actually fund ourselves and then work out what dividend is needed pay. So we kind of it's a great business to be in, central banking. You print money and people believe it, and touch wood, and so it's a slightly different beast. The fiscal challenges, etc., that are there. So very focused on.
Listen to this closely, right here.
We actually fund ourselves and then work out what dividend is needed to pay. So we kind of it's a great business to be in, central banking. You print money and people believe it, and
we actually pay ourselves, and then central banking. It's a great business to be in. We print money, and everybody believes it.
Crazy.
I'm over it, guys. Are you over it? I'm over it. I'm over being ruled by the central bank. So Tucker is warned of his arrest, and the DOJ is blackmailing Congress. I can't stress this enough about the DOJ blackmailing Congress, because there is no other reason to come out with this in the last throes of what's going on. The DOJ is blackmailing Congress. I firmly believe that. It's just my opinion. I should say that. But I'll show you again, and I know I talked about it at the beginning of the hour as well, but we're almost at the end of the hour, and I just want to play it again, the video of this guy, and maybe I won't even play the whole thing. The DOJ, appears to me, comes out of nowhere and starts talking about going after people for their sex stuff, and nothing about Epstein or anything like that. No. But hey, we're gonna get these guys who are voting now. Look at this. This is crazy. And actually, if you read the tweet, so underneath it, I was like, why? New York never banned this man from doing business in New York. Of course, that was just kind of a funny play on, of course, Trump. But
Sex ring was built on secrecy and exclusivity, catering to a wealthy and well-connected clientele, and business was booming until today. It's alleged that the prospective sex buyers in this scheme first had to respond to a survey and provide information online, including their driver's license photos, their employer information, credit card information, and they often paid a monthly fee to be part of this illicit club. The affidavit that's unsealed in court today alleges that once the buyers were verified, they were then texted and allowed to place orders with commercial sex workers. They would choose the duration of this encounter they wanted, the types of services they wanted, and they also would receive a menu of different options and different women that they could purchase, sometimes at rates between $350 and $600 an hour. The menu included photographs of the various women who were available that day. And the defendants then directed the sex buyers to various apartments in Watertown and Cambridge in Virginia, where they engaged in commercial sex.
Anyway, I'm moving around, so it's choppy, but you get the point. I don't need to play it all. Guys, play ball. Vote for a $95 billion deal, or you are going down. You're going to lose your wife. You might lose your kids. You're going to lose your life. We are coming for you.
Yeah.
In no uncertain terms, in my not so humble opinion, that is exactly what is going on. The United States DOJ is being used to blackmail these people into voting to send this $95 billion that after we just sent 100 and something billion last month to Ukraine and Israel for these endless wars. Guys, we stop funding these wars and these wars stop. They stop. We're about to go off on Smart Money Culture TV. We're about to sign off here as well. Thanks, David, for coming on. We will be back on your TVs at 11 a.m. in Texas and Louisiana. And that is 12 noon if you're joining us on our stream on the East Coast of the United States. And then you can do the math for the other places.
Yep.
See you soon.
See you soon.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.